Hello, this is Cynthia Fick, and this is the November 12th stock market update. Well, in a week that looks like they're going to end the government shutdown, the market continues to be led by earnings. So we're in the middle of what looks like an earnings melt up, and that's one of the best kind of melt ups to have because it's based on fundamentals. The analysts have been raising earnings estimates for 2026 constantly, and instead of the 6.5% earnings we expected on the S&P 500, it's looking closer to 14%. So a big increase in earnings. So this is phenomenal considering how volatile this market is. So I guess the question is, what makes this different than the 2000 when we had our last what they call bubble period? And we're going to look at some different times in history where they talked about having a bubble in the media and how long it took for the bubble to actually pop. Again, why I think this is different is that the earnings, the prices of these stocks going up are based on actual earnings, actual fundamentals, not just the future. So let's look at some other times. I'm going to share a screen with you that shows you, times before the big kind of bubble that we had, and it was a bubble that popped in around 2000. And here's what led up to that. If we go back to as late as 1985, they were predicting some sort of bubble was going to happen at that point. The market was at the S&P 500 was at 182. That bubble didn't pop until March 24th, 2000. So that was a full 735% increase. It took 5,303 days for any bubble to ever appear or even pop. So these are all the many times over the years, 1985, 1986, 87, 88, 90, all the many times. And I told you about the Federal, Reserve Fed Chair Alan Greenspan did his irrational exuberant speech in 1996. At that point, the S&P 500 was at 744 and it went on to 1527. There was a 105% increase in the S&P 500 after he said that about irrational exuberance. So this chart is just to point out that if you're spooked out of the market when they start talking about bubbles, it brings about a bunch of emotion and fear. And unfortunately, the chances are you could be spooked out of the market before there's a big run. So we always must take that into context. So I will talk to you next Tuesday. Have a good week. Bye.